So today we are going to discuss PO3 trading strategy, also called accumulation, manipulation, and distribution trading strategy. So first, we will discuss the basics. You all might know about the basics already, but still we will discuss the basics and then we will dig deep into the missing piece, okay? So what's accumulation? Accumulation is the price action, okay, in a certain range, up, down, okay? And usually in the accumulation, there are three types, okay? Like 1, 2, 3, okay? 1, 2, 3. So in PO3, the first step is accumulation. And in accumulation, you usually get three types, okay? Three types of the buy side and three steps of the sell side. And then the next step is manipulation. It can either be on the upside or on the downside. Let's suppose this is our manipulation. So what happens is the price comes down into this zone, okay? It hunts your stop losses, it takes the sell side liquidity, and then what happens? The continuation or distribution. So once it hunts the stop losses, it goes up. So that's the bullish case, okay? In the bearish case, we get accumulation, then we get the manipulation, and then the distribution or continuation, okay? So in both cases, there are three steps, usually in the accumulation, then the manipulation, and boom, down. But everybody knows about these three parts, okay? The accumulation, manipulation, and distribution. The main thing is how to execute a trade on the PO3 trading strategy. Okay, so it can also happen that the accumulation is like this, okay? It might not be horizontal, it can be diagonal like this, and then you can get the accumulation, and then the distribution will also be somewhat like this, okay? So it's not necessarily horizontal, okay? It can be diagonal like this. So how do you execute this trade? How do you execute PO3 trading strategy? So I will show you this example. This is Euro, GBP, British Pound, and you can apply this on Bitcoin. You can apply this on indices like ES and Nasdaq, okay? It works on every asset. So you can see this is our accumulation, okay? So there are three steps. You can see these are the three steps. 1, 2, and that's the third one. So we got three steps on the buy side, and you can see three steps on the sell side. Okay, let me draw it. 1, okay, 2, because it has to go up, okay? It hasn't reached that level, so it's not going to count 3. And then this is the third step, okay? So this is our accumulation, okay? Accumulation is this one. Now, what's the next step? The next step is the manipulation. That's our manipulation, okay? But how do you know if it's manipulation or it's distribution, like if it's going to go up straight or if it's going down? Like you can see, it has gone down here, but how do you know that before the move has happened? That's the main thing. So that's the missing piece. Like the confirmation is the real thing. You have to confirm it. Like if the price will go down, you can see many of you would have longed here because you can see this is the order block, a big candle. What people do is they're long here, okay? But you can see it trapped the longs and then suddenly it went down. So why it went down and what's the confirmation of PO3? Let me remove this and I will again go back to the SMT divergences. Okay, so the SMT pair, the correlated pair of British pound is euro. Like if the price of pound goes up, the euro also goes up. If it goes down, the euro also goes down. So here you can see the same accumulation has happened here. Okay, you can see. Now you can see here that this was the top of the accumulation. Okay, what happened? That the price took this liquidity and went up. If you see this, if you see euro, in euro, we didn't get that. So why? Why it happens? Because you see, it means that the price has gone up just to take the liquidity, just to hunt the stop losses. Like it's not bullish at all. You can see that the price, these are correlated pairs. Euro isn't going up, but GBP is going up. It's just because it want to take some stop losses, it want to take the buy side liquidity, and then it will go down. So in PO3, what you have to do is on higher time frames, you have to look for the manipulation on the euro too. And the euro going up like this wouldn't be the manipulation. Okay, it would have gone straight up like this, but there is no manipulation on the euro. There is SMT divergence. This is called SMT divergence when the price of one pair goes up and the other don't. This is called the SMT divergence. So once you get this divergence, okay, then you have to look for order blocks or smaller time frame. What is order block? An order block is an up closing candle and this is the bearish case, so I will discuss the bearish case when a candle closes above this, okay, and then the next candle closes below this. Okay, here you can see no order block on 4 hour, but you can find those order blocks on 15-minute or 1 hour or even 5-minute or 1 minute. Okay, when you get the order block, what happens is the price goes up again to this area, and that's where you short, and boom. So your stop loss would be around here, okay, the top of this candle, and that's your target. The target is these fair value gaps. Okay, so you can see that was the missing piece, that SMT divergence on the top or on the bottom. That's the missing piece. You have to find those divergences. I will now explain a bullish case. You can see this is the accumulation. Okay, now manipulation. How do you know if it's the manipulation? You can see that there was the accumulation, but we didn't get the manipulation on euro. So that's the confirmation that this is the manipulation and the price will go up, and it has gone up. So I have discussed two cases. This one, the bullish one and the bearish one. In both cases, you see the manipulation on pound, but you don't see the manipulation on euro. So that's your confirmation, and that's your setup for life. Okay, one trading setup for life.